Welcome, market walkers. In this video, we will be going over why copper is the new oil. Additionally, we will look at the primary stocks and ETFs that are powering the future. Let's get started. Oil built the 20th century. It fueled cars, powered wars, and drove global trade. For decades, whoever controlled oil controlled the world economy. But the 21st century doesn't run on oil. It runs on electricity. And electricity runs on copper. Copper is the ultimate conductor. It moves electricity more efficiently than almost any other metal, making it absolutely essential to electrification. And here's the thing. We're in the middle of the biggest electrification wave in human history. Think about it. Every electric vehicle rolling off the assembly line uses up to 4 times more copper than a traditional gas car. An EV needs copper for its motor, its battery wiring, its charging systems. It's copper from bumper to bumper. But EVs are just the beginning. Renewable energy is even more copper intensive. Solar panels, wind turbines, energy storage systems, they all require massive amounts of copper wiring and components. A single offshore wind turbine can contain up to 5 tons of copper. That's more copper than most gas stations use in their entire lifetime. And then there's the AI boom. Those massive data centers training ChatGPT and powering cloud computing, they're essentially copper factories. The servers, the cooling systems, the power infrastructure, it all runs through copper. The International Energy Agency estimates that the world will need 50% more copper by 2040 just to meet our clean energy goals. But here's the problem. We're not opening enough new copper mines to meet that demand. Finding and developing a new copper mine takes 10 to 20 years on average, and the market has already started to notice. Over the past year, copper-related investments have absolutely surged. Let's look at some numbers. Freeport-McMoRan, that's ticker FCX, one of the world's largest copper producers, has gained between 55% and 77% over the past year. That's not a typo. We're talking about double-digit gains in a sector that used to be considered slow and steady. But the real story is in the ETFs. The Global X Copper Miners ETF, ticker COPX, has returned between 86% and 124% in the past year. Some investors have more than doubled their money just by betting on copper miners as a group. Now here's what's interesting. This isn't just about copper prices going up. Yes, copper prices have risen, but what's really driving these gains is investor sentiment around the future. The market is pricing in a world where copper becomes increasingly scarce and valuable. Think of it like investing in oil companies back in the 1950s. You weren't just betting on today's oil price, you were betting on decades of growing demand. That's the position copper finds itself in now. So who are the major players in this copper revolution? Let's break down the top mining stocks and what makes each one unique. Freeport-McMoRan, FCX, is the big kahuna of copper. They operate some of the largest copper mines in the world, including the massive Grasberg mine in Indonesia. With returns of 55% to 77% over the past year, FCX is the pure play if you want maximum exposure to copper prices. When copper goes up, FCX typically goes up more. But remember, that sword cuts both ways. BHP Group, BHP, is one of the world's biggest diversified miners. They do copper, but they also do iron ore, coal, and other commodities. This gives you exposure to copper with less volatility, since they're not dependent on just one metal. BHP has gained 20% to 30% this year. Solid, but not as explosive as pure copper plays. Rio Tinto, ACRIO, is similar to BHP, diversified, stable, and focused on the long term. They're investing heavily in copper projects for the future, particularly in the Oyu Tolgoi mine in Mongolia, which is one of the world's largest undeveloped copper deposits. Rio has returned 15% to 25% this year. Southern Copper Corporation, SCCO, focuses on operations in Peru and Mexico. What makes SCCO interesting is their extremely low production costs. They're one of the cheapest copper producers in the world. Teck Resources, TECK, is a Canadian miner that's been restructuring to focus more heavily on copper. They recently spun off their coal business to become a pure metals play. With gains of 25% to 45%, Teck represents a company in transition, potentially offering upside as they streamline operations. Now, if you're thinking, I don't want to pick individual copper stocks, you're not alone. This is where ETFs shine. They give you diversified exposure to the copper sector without putting all your eggs in one basket. One of the most well-known options is the Global X Copper Miners ETF, COP-X. This fund holds a diversified basket of global copper mining companies. It includes major producers like Freeport, McMoran, Southern Copper, and other large international miners. COPX is a pure play copper miners ETF, meaning its performance is closely tied to the equity performance of copper-focused mining companies rather than the commodity price alone. The expense ratio is approximately 0.65%, which is typical for a targeted sector ETF. If you want diversified exposure but with a slightly different construction approach, there's the iShares Copper and Metals Mining ETF, ICOP. ICOP tracks an index of global companies involved in copper and metal mining. It includes both large-cap diversified miners and more copper-focused producers. Compared to COPX, ICOP tends to have broader exposure across metals while still maintaining a strong copper allocation. The expense ratio for ICOP is approximately 0.47%, making it slightly lower cost than COPX. Another option is the Sprott Copper Miners ETF, COPP. This ETF takes a more selective approach, holding a smaller number of copper mining companies with a focus on balance sheet strength and resource quality. It's more concentrated than COPX and ICOP, which can increase volatility but also potentially amplify upside if copper prices rise. Now, before you rush out to buy copper stocks, let's talk about the risks, because there are always risks. First, commodity prices are cyclical. Copper has had an amazing run, but that doesn't mean it goes up forever. If we hit a global recession, demand for copper could drop significantly, taking these stocks and ETFs down with it. Second, mining is inherently risky. Political instability, environmental regulations, labor strikes, mine accidents, all of these can impact production and profits. Many of the world's largest copper deposits are in politically unstable regions. Third, timing matters. We've already seen significant gains in copper stocks over the past year. The question is whether we're early in a multi-decade trend or late to a short-term rally. Nobody knows for sure. That said, the fundamental thesis is compelling. The world needs copper for electrification, renewable energy, and AI infrastructure. New supply is constrained, and global governments are committed to decarbonization policies that all require massive amounts of copper. So here's the bottom line. If oil powered the fossil fuel age, copper is powering the electric age. From electric vehicles to AI data centers to renewable energy grids, this ancient metal sits at the center of humanity's technological future. The question isn't whether we'll need copper. The question is whether the companies mining it today can meet tomorrow's demand. Whether you choose individual stocks like Freeport, McMoran, or Southern Copper, or diversified ETFs like COPX or CPER, you're making a bet on electrification. You're betting that the world's transition away from fossil fuels will continue and accelerate. As always, this isn't financial advice, just educational content to help you understand what's happening in the copper market. Do your own research, consider your risk tolerance, and maybe talk to a financial advisor before making any investment decisions. Thanks for watching, and I'll see you in the next one.